In this video, guys, I'm going to look at what's really happening at WeWork. Stay tuned. Hey guys, warm welcome to you. Alright, so if you're not familiar with WeWork, this is all in the news at the moment when I'm filming this video, and even when you come back and watch this, who knows how it's going to play out. So I've got a quick guide to what's happening, where it's been, all the shenanigans that have been going on, and where we're at the moment, and maybe what's going to happen in the future. So WeWork, for those of you who are unaware, is basically an office renting company. It's a very nice space, there's no doubt about it. They do a great job. It's an office environment which has desk space, i.e. someone can just rent a desk and sit there. Hot desk space, as they call it, and someone can just rent the access to the building in the communal areas. And then you've got actual office space, so you can rent office space there. And you have people all the way from startups all the way up to bigger companies like Amazon and Facebook who are renting out larger areas as kind of satellite offices for different departments. Now, it's a very nice space, there's no doubt about it. They kit it out very well, they've got great interior designers, and it's a modern type of space. You know, there's the coffee machines there, they have free beer in a lot of the places, they have kind of sofas and stuff, meeting rooms, little phone booths. You know, it's a good, nice environment to work. So it's super popular with, you know, startups who come in and like that environment. It encourages, you know, it's a nice place to work so that when you're hiring staff, they're not in some sort of boring place. So the concept is good, right? But the business model for WeWork is that they will have a long lease on a floor or a couple of floors in an office building. They'll kit it out in their traditional WeWork style, and then they'll sublet that space to either offices and companies, or to the hot desks and to the dedicated desks. But mainly, obviously, the revenue comes from splitting up the space into smaller offices. You've got 2-man offices all the way up to kind of 30-man offices or whole floors. And that's how they make their money. The idea is they're making the difference between the two. They've kind of got this long lease, kitting out, adding value, and then letting the space out, and they're making more per square foot. That's what happens in theory. Now, of course, they're vulnerable because they've got many small companies in there who ultimately can go bust. Most startups will go bust at some point. That's just the nature of it. Some will thrive. So it's very transient. There's going to be lots of different people coming in and out. And they are vulnerable ultimately to a downturn in the economy because they're on the hook for this long lease, an expensive lease over 15 years, 20 years, 25 years, whatever it may be, where they negotiate with the landlord. And they've got these short-term lets, if you like, for these other companies that ultimately, if they don't pay, they're going to struggle. But anyway, that's by the by, that's the business model. And it's nothing new, this kind of subletting out office space and splitting up. And they do a good job. Just looking at it from a pure perspective of the offices are pleasant places to be, pleasant places to have meetings, pleasant places to work. However, they haven't done so well with their finances. So let's have a little look. So Adam Newman is the CEO, or he was the CEO, and his wife, Rebecca Newman, was also on the board. Now, there's a bizarre structure going on here, as with all these kind of things. You've got We Holdings, WeWork, We, and We Company. Basically, I'm just going to call it WeWork from now on. But if you want to kind of dig in and find a little bit more out, then please do, because you know there's holding companies, there's kind of subsidiary companies, and all that kind of stuff. But that's not very exciting. What's more exciting, or more interesting, should I say, is this. WeWork had a $47, almost $50 billion valuation. SoftBank is one of the biggest investors. They're the ones pumping a lot of money into WeWork. And at the last fundraising round, they raised an equivalent of a valuation of $47 billion. Now, there's loads of kind of other stuff about how the money's come about and some of the caveats that come with the money and some of the compromises they had to make. But anyway, 47 billion is ultimately where it was. So in August the 14th, this is a long-standing IPO that everyone's been waiting for. August the 14th, they finally filed for IPO, and they're expecting around about a $50 billion valuation. Now, of course, when you file for IPO, you have to open up your books and have to be very transparent with what's gone on, because obviously you're looking for now external investment, and any investor who wants to invest needs to see exactly what's going on under the bonnet or under the hood. So when they did this wasn't so good for them, because we started to see all sorts of odd things going around, particularly with Adam Newman. Now, Adam Newman had all sorts of different dealings going on. He'd been paid, he had a $7 million loan, which he paid back, fine, I suppose. He also leased his buildings to the We company, or WeWork, whichever one it was. So he owns these buildings and leases them back to his own company that he's CEO of and makes money from that. So he was also buying, allegedly, don't know if this is true or not, also buying those buildings with money that he was kind of loaned or money that he had got from the company and then leasing it back. So not a bad little earner for him there. The other thing which raised a lot of eyebrows was ultimately, to be fair, went back. He sold rights to We, or the trademark We, to We Company, or the subsidiary of We Holdings, for $6 million. So he'd already got that personally. He sold it to his company for that. Now, he's later paid that back because there's a lot of controversy about that. It was like, hang on a second, this is ridiculous. So he's undone a lot of things. Now, the idea is, I guess, that he was trying to become, undo all these things and make it look a little bit better so they could take it to IPO, because they need to get it to IPO. SoftBank needs to get it to IPO so they can exit. They need this really, really severely. They need this. So anyway, as we saw this IPO filings, loads of other things talking about how much money they'd lost. So if we run through that, then we'll kind of look through some other stuff. So the timeline of their loss was, in 2016, they lost 429 million. 2017, they lost 890 million. 2018, they lost 1.6 billion. And in the first half of 2019, they lost nearly 700 million. So on track for kind of 1.2 to 1.4 billion loss, which is quite hefty. Right now, they've got a very aggressive growth strategy. They're building, they're not building them, they're actually renting buildings all over the place. They've got numerous of the buildings in London, numerous buildings in Manchester, adding buildings all the time, massive footprint in the US and Asia. They've got a lot of buildings and they're constantly trying to grow. And as a kind of person looking on the side, you look at some of the cities they're going in and how big they're growing. You think, one, maybe two for some of these cities, but when they're talking 5 or 6, you think, well, how many companies can really rent this space? Now, they changed the model slightly a little bit, just going back to the model. They were renting to smaller startups, etc. But I think they realized that was very vulnerable. So now they're doing bigger deals with companies like Amazon and Facebook. They're saying, hey, we'll kit out a whole floor for you, or we'll kit out a big space for you. You can pay us to give it that vibe, that kind of area and feel that a lot of people like to work in. We'll run it for you and you can do it like that, and we'll give you a reduced rate. So they kind of switched their business model up a bit. They bought the Meetup Meetup company, which does the online meetups, and they allowed people to host meetups there. They also bought some other companies as well, some acquisitions. So lots to look at if you fancy digging in. But anyway, what's important now is the fact that after literally less than a month, they said, oh, you know what, September the 5th, they went, oh, you know what, actually, valuation, I don't think we're going to be able to get 50 billion, 47 billion, we'll halve it. We're probably looking at around 24. Of course, big alarm bells, just suddenly halving the valuation in less than a month. That's pretty significant. And then actually, really only kind of a week later or so, they kind of said, okay, well, actually, what we'll do is people are concerned that Adam Newman had 20 votes per share. He had lots of kind of leverage on the company. He had rights to dump lots of stock. And they said, okay, well, you know what, we'll restrict that. So it went down to 10 votes per share, and loads of restrictions on how much he could sell. Another big red flag that I left out, guys, which was the biggest one, is the fact that he actually sold $700 million worth of stock options. So he cashed out pre-IPO. Now, normally, if you're a CEO of a company and you've got shares, you expect the value of the company to increase, because that's what you're trying to sell at IPO, right? You're saying, hey, listen, guys, we're going to IPO. This is the value of the company, and you guys should invest in this because we're going to grow and it's going to be worth a lot more. So that raised a lot of eyebrows. I mean, you don't mind, I guess, if someone takes out, well, let's say, I mean, 70 million is probably enough, but if someone takes out some money, that seems fair, right? You think, fair enough, there's no reason why he shouldn't take out some money for what he's done and kind of mitigate some of the risk and do some things. Maybe he wants to buy a few bits and pieces here and there. But 700 million exit pre-IPO raised a lot of eyebrows. So why aren't you staying in? If you believe in the company, why are you taking 700 million now? So anyway, that was that as well. Anyway, fast forward, guys, September 16th, now the IPO is delayed. The valuation is 10 billion, and they've said, you know what, we're going to have to delay this, because ultimately it doesn't look great, does it? You go into the IPO now and you say, well, actually worth 10 billion, you're worth 57. Well, what can we trust? Within a month or two, you've gone from 57 billion to 10, which is kind of this is what the chart would look like over time. Your valuation's increasing as people investing money, and then bang, all of a sudden it's now worth 10 billion. That doesn't look like a very good chart. And so they've shelved the IPO. They've gone, right, we're going to go back to the drawing board. And they've now said they're going to lay off lots of staff. They're going to make cutbacks. They're going to trim everything right down. So the whole idea of growth and of aggressive growth is stopping. They're selling some of these subsidiary businesses that they bought, and they're going to have to lock things down. Now, what's the valuation now? Well, obviously they need cash injection after cash injection to survive. This is what SoftBank has been doing, putting money in time after time. If you're burning through this kind of cash, you need more cash. Now, they had a lot of kind of restrictions on the cash they were giving to WeWork or We Company or We Holding, whichever one it was at the time. And they're saying, listen, we need to go to IPO with this, need to go to IPO with this. Now that's happening, I don't know what's going to happen. Now, obviously, SoftBank, from kind of just a layperson's perspective looking in, SoftBank have got pretty limited options. If they stop giving WeWork money, or We Company money, whichever one it is, they are going to struggle. They're just going to go under. So all that investment they've made will just go to nothing. But then again, do they put bad money after good? Good money after bad, should I say? That's not a good option either. So they're going to restructure. They're going to kind of think about cutting things down and perhaps making it profitable as quick as possible. And then the street's going to be far more receptive to the IPO. If they go to the IPO and go, listen, you know, these are our best buildings. We've cut the buildings off that aren't making any money. We've restricted the kind of expansion plans. We've reduced the staff. We've reduced the costs. We've done this. We've done that. Here are the buildings. They're making money. This is the whole thing now. It's profitable, or it could be profitable relatively easily. That then would be a much more attractive IPO for a lot of people. I think it would anyway. So that's potentially what they're going to do. But who knows, guys? They could be in so much trouble here that they've not got enough to trim off. They can't find any more investment. It's become a toxic thing to invest in. He's not got a very good reputation at the moment. He's now out as CEO, by the way, and he's chairman. You know, who knows what's going to happen with all this. SoftBank are obviously in damage limitation mode, and this is just a bad story. But the point is as well, guys, is that the street nearly lobbed this out at 47 billion and sold it to investors for 47 billion when it completely wasn't worth that. So this has really upset the IPO market, you know, with Uber and Lyft as well. You know, these kind of IPOs used to be the great thing, and they'd be really successful and great, but this has really kind of messed things up, and people can't trust stuff anymore. You know, they can look at IPOs with very hard scrutiny under a microscope and see what's going on. The final thing is, guys, loads of other stuff as well with Adam Newman. Say, you know, he had a private jet and that's now been sold. There was all this kind of controversy around the culture there, you know, a lot of drinking allegedly going on, a lot of things that the people just found uncomfortable in the way he ran the company. So there we go. Who knows what's going to happen? Losing money hand over fist, valuations plummeting through the floor. Currently saying 10 billion, but maybe it's not even worth that. You know, who knows? They need to restructure, that's for sure. Something's going to happen. It's super interesting to watch, and who knows how it's going to pan out. But when you're watching this, you're probably going to know. Depends on when you're watching this. So let me know in the comment section below what you think about WeWork, and I'll see you in the next one. Take care. Bye-bye.